So welcome to this special Travel Weekly Roadmap to Recovery webcast. Today we're going to look at a specific issue that people have been talking about really since the beginning of this crisis, when travel stopped, and the impact on the industry was obviously immense. And one of the big talking points has been around how the industry finances itself, and in particular how it looks after customer money. So we thought we'd do a special double webcast on trust accounts, because there's a lot of talk about that being the future for travel, and many companies will be looking at what that future might look like for them. So initially we're going to hear from Chris Photi, who's the head of travel and leisure at Hart Associates, who's a leading expert on trust accounts. He's implemented a number for various firms. He's going to take us through a presentation, some of his thoughts about trusts and how they operate, and then we'll go into a discussion afterwards with some leading providers of trusts. So initially, I'll hand over to Chris, and he'll take us through his slides. So over to you, Chris. Thank you.
Thank you very much, Lee. Let's just share screen here. Right, we're going to be discussing today the role trusts will have to play in the future of travel regulation. It's going to be a whistle-stop tour of how trust works, the legislation to which they relate, and look at some practical examples of trust providers and how the various trusts work. Obviously, we're discussing the use of trusts specifically in relation to the package travel regulations. The Package Travel and Linked Travel Arrangement Regulations 2018, which we'll refer to as the PTRs, has a section in there specifically to do with insolvency protection, and that's all we're speaking about today in relation to the PTRs. The relevant section of the PTRs there outlines what we're going to discuss. I'll just read it out. Package organisers must provide security that covers the reasonable foreseeable costs of and delivers effective and prompt returns of all payments made by the traveller for services not performed, and for the traveller's effective and prompt repatriation in the event of insolvency. I think that's pretty self-explanatory, but there are some nuances that we need to consider. The PTRs must also allow the possibility for such insolvency protection to offer the continuation of the package. So it's not only about protecting consumers' money and granting them a refund. If it is at all possible, the consumer needs to have his holiday arrangements fulfilled. And basically, trusts are split into two categories as far as financial protection is concerned, just as the PTRs are split into two categories in the UK, namely flight-related packages, which come under the auspices of the Civil Aviation Authority and the ATOL scheme, and there are, of course, non-flight packages, and you can see there the differentiation. So a flight package has to be encompassed by the ATOL scheme. We're going to discuss CAA-approved trust accounts as part of this presentation. The CAA do acknowledge trust accounts, and it is possible for you to undertake ATOL business using trust protection as opposed to any other form of protection. As far as insolvency protection is concerned for non-flight packages, there are three ways of doing it, either via bonding with an approved body, so that would be someone like ABTOT or ABTA. Financial failure insurance, there are a couple of products still available, but they're very thin on the ground in the current situation. Or, as we're going to discuss under Regulation 23 of the PTRs, the use of a trust account. We're going to look firstly at non-flight packages, and then we'll come on to flight packages. The interesting point about Regulation 23 now that wasn't in the previous regulations is the fact that the trust must be administered by an independent trustee until the contract has been performed. Previously, if you were an organiser, you could set up your own PTR trust and effectively administer it yourself. That is no longer possible. You have to have a suitable independent trustee, and we'll discuss organisations and or firms that provide those services a little later. Key aspect of the trust at base level is the customer funds have to remain within the trust until the contract is fulfilled. So that effectively means until the traveller has returned from their holiday or had their travel arrangements completed. It is possible to obviously reimburse a traveller in certain circumstances from the trust, and if a traveller has forfeited funds due to a cancellation on the organiser's cancellation terms, then those monies can be withdrawn at that particular time. Key aspect of the trust is that all costs of the trust have to be paid by the organiser. They do not come out of the trust. So that has to be borne in mind if you are going to set up a trust structure. It's interesting to note, and we will discuss this as we go along, that you can combine a trust fund with insurance that is compliant with Regulation 24 of the PTRs. And in those circumstances, the trust only needs to hold sufficient funds to reach liabilities that may not be covered by insurance. So who are the independent trustees available to travel businesses? Well, there are a variety. I've mentioned a few here. You have independent trust organisations that are also membership groups and offer a variety of other services to travel organisers. That would be the Travel Network Group, or perhaps as they're still known in this particular area as the Travel Trust Association. And we also have Protected Trust Services. They are going to be part of the panel later and will explain how their organisation is and what their approach to trusts are. And there are also independent professional trustees. These are professionally qualified individuals that oversee trust structures. Mentioned too there, PT Trustees, Serenity Trust Services. PT Trustees is operated and overseen by chartered accountants. Serenity Trust Services overseen by qualified lawyers, solicitors. What all trust will need is a trust deed that lays down the terms of how the trust is to operate, and that will clearly reflect what the trustee needs to do in relation to the funds held within that trust. It needs to be PTR compliant, and it will be the reference point as to how everything operates on a day-to-day basis. What about CAA approved trusts? Well, these can be administered as previously outlined by the same independent trustee organisations or independent trustees. They will always be subject to a CAA standard trust deed wording. The CAA will not accept variations to their standard wording. If you're thinking about setting up a trust, then contact your CAA contact, and they will provide you with a copy of this trust deed, which explains how they expect the trust to operate. I'll just highlight for you a few key points around how the trust operates and the do's and don'ts. Obviously, for brevity, this is not going to be as in-depth as perhaps I might like to, but it does give you the headline points. First of all, a CA trust can only relate to atoll bookings. The CA will not allow their trust to be tainted with non-atoll booking monies. This is in the case of a CA-approved independent trust, not in the case of the trust organisations who will have different arrangements and perhaps a different agreement with the CAA. But if you're setting up your own independent trust using a professional trustee, you would have to have two trust funds if you're transacting CAA atoll business and non-flight package business. How does that work? Well, basically, funds have to flow through an interim account. This trustee will refer to an interim account. An interim account is effectively your usual bank account. Money will flow in from the consumer by means of PDQ or whatever other means of collection of cash you have. and within 48 hours of receipt, you as the travel organizer would need to differentiate that cash and make sure the atoll cash is placed into the trust. I'm sure the trustee will have arrangements of checking that that is complied with to ensure that the CAA approved trust is suitably funded. Downside of trusts for travel organisers would be if you sell via travel agents. It really is almost impossible to effectively operate a CAA approved trust in such arrangements. Why? Because it's simply impossible to get the client funds into the trust account within 48 hours of receipt if a travel agent is receiving those funds. Most travel agents, merchant acquiring clearance arrangements will be T plus 3 days. So the consumer has paid his money and it's going to take 3 days before it hits the agent, so on and so forth. So it doesn't work if you sell via travel agents. Although I have seen in certain circumstances the operation of a CA approved trust where the tour organizer has funded pipeline monies that are held with travel agents, but in practical terms it doesn't really work. What happens with regards to the flow of cash? Well, as we've already highlighted earlier in the presentation, all of the customer cash needs to stay in the trust until they have finished their travel arrangements, except in certain circumstances where there is insurance or other arrangements that protect against supplier failure. So under the standard CA approved trust, they will allow flight costs to exit the trust immediately and certain bonded cruise costs as well. But that assumes that supplier failure is covered in some way, either by scheduled airline failure insurance or cruise protection cover, or perhaps if you are paying using a payment card or a virtual credit card where there is a chargeback facility in relation to the non-performance of that. All other costs, ground arrangements, other transport, car hire, other tourist services, the four headings of the PTRs have to remain in the trust. CA have a variety of larger license holders that already have CA approved trusts. I believe in a follow-up panel sessions that are being run by Travel Weekly, you're going to be speaking to one or two of those, and they will be able to give you clear practical guidance on how they operate the trust and how it works for them. It is, however, mandatory for CAA accredited bodies to operate CA approved trusts for their members. So when you see the host of accredited bodies such as Hayhurst Travel, Barhead, Broadway, Global, these type of organisations, they will have mandatory CAA approved trusts for their members. They may well transact separately regarding their own transactions as a corporate entity, but as far as their members are concerned, it is mandatory to protect by means of a CAA approved trust. What though of the outlook as far as trusts are concerned post-COVID-19? Well, the background currently is that there is a paucity of bond insurance providers. I've named 5 there. The last 2, it is uncertain as to whether they are going to remain in the bonding insurance market. There are obviously a raft of banks that will provide bonds. Organisations like ABSA have their own bonding structures, but they would invariably require you to cash cover those bonds. Insurance companies, by and large, will charge a premium and provide the bonds without any cash cover. We have seen some failures within this sector that have impacted on insurance providers. If there are more coming along in the days ahead, then the bond insurance market is going to get very tight indeed. The analysis of the bond insurance market at this moment in time is broadly most insurers will protect up to their existing exposure, but are not taking on any new exposures or any amounts over and above that. Obviously lesser amounts, yes, they would look at that because they are already on your risk. There were a variety of financial failure insurance providers. Somebody may correct me on this, but I believe there are only two active ones at the moment, IPP, International Protection, Passenger Protection, and the Travel and General Top Policy. There is a shortage of FFI providers. It is extremely difficult to get that form of cover now if you haven't already got it in place, because of the risk analysis being undertaken by these insurance underwriters. Therefore, without the alternatives of bonding structures, you can see why trusts are coming more to the forefront in tour organisers' minds, and indeed that has been the driving force behind this presentation, because TW have received such an interest in trusts from you. Merchant acquirer section 75 risk. This is a huge issue for the travel industry at the moment. A whole raft of merchant acquirers are revisiting tour organisers and are asking for financial security and other such matters. Trusts are generally seen by them as a way of protecting them as well as protecting the consumer. So that has brought into focus trust too. The other thing that's brought into focus trust is the whole refunds scenario. It seems that the vast majority of the travel industry, under the direction of ABTA particularly, are issuing refund credit notes which remain consumer protected, but nevertheless the consumer is still entitled to a refund. This is causing cash flow issues as far as tour operators are concerned, and the industry as a whole has had rather bad press when it comes to the consumer watchdog organisations about the whole refunds process. If you look at things like the moneyexpert.com rankings and the general consumer confidence, the tour operators that tend to be at the top of those rankings are those that have had trust accounts and have therefore been able to deal with refunds more effectively than other tour organisers. Why weren't they prevalent previously? Well, they were quite common in the travel industry, but I doubt as common as they are going to become. So I'm just looking at the advantages and disadvantages of trust for you now, and it will be self-evident why they haven't been as prevalent as you might think. What are the advantages of a trust account? Well, the advantages are they're easy to set up and there are no expensive trade association subscriptions. To join some of the trade associations, particularly ABTA, if you're a material size business, their subscriptions are substantial. So if you have your own trust facility without trade membership, and indeed you cannot be a member of ABTA and protect your non-flight packages with a trust, you wouldn't have to pay those subscriptions. Trusts ring-fence customer cash, and that's an advantage. Therefore, the whole refund scenario becomes easier for businesses that are not used to trading off consumer cash. Certainly, trusts are much cheaper alternatives than bonding and insurance. You pay simply the trustee fees or other related fees of trust organisations, which are more reasonable. Also, operating your own trust gives you less exposure to knee-jerk regulators, trade bodies and insurers. Knee-jerk regulators and trade bodies will jump up and down and say we never knee-jerk. That's absolute rubbish. They do knee-jerk. And therefore, if you have trust arrangements, this will protect you from unknowns such as that. We've discussed refund and fulfillments. That makes trusts attractive. And as we've already said, they're merchant acquirer friendly. Most merchant acquirers will recognise trusts as an effective means to protect them as well as the consumer. And there is the consumer confidence messaging that's come out of the whole of the refund credit note scenario. An example of that would be Trailfinders. I think they're taking part in this series. And their branding, if you look on their website, is all around consumer confidence. in relation to refunds. And another thing that trusts do is motivate tour organisers to have enhanced accounting and trading disciplines. What are the disadvantages? Well, the reason trusts have not been prevalent is self-evident from this presentation so far, that there are significant cash flow issues. You have an ability to use consumer cash to pay suppliers and overheads earlier than the date of return of travel. Now, a lot of suppliers will buy into that trust arrangement, but you would need to ensure that you as a tour organiser, a travel business, have sufficient cash to be able to cover your overheads and run your business. Trusts, unfortunately, do take up administration and management time, so don't underestimate the impact of that. Branding, well, we've said if you've got a trust message that goes out there, that could be an advantage, but equally, if an organisation like ABTA will not accept non-flight packages protected by trusts, you couldn't be a member of ABTA and would therefore lose their branding. Despite what ABTA tell you, that is the major reason that people are members of ABTA. It's for that logo. Another disadvantage of trust is you need to ensure that the professional trustees you use are competent and understand travel. The organisations I've mentioned previously are all approved organisations. They have a trustee competency. It's often been levelled about trusts that a big disadvantage is potentially fraud. Well, frankly, the travel industry has been the victim of fraud as far as bonding arrangements and other arrangements are concerned. But yes, that is a potential situation. A tour organiser or an incompetent trustee could be a victim of fraud and the funds not be there when they're needed. And one other disadvantage is that if you've got to wrap up cash in a ring fence of a trust account in the event of selling your business or future M&A activity, there is no working capital enhancement on a sale for the amount of money that's held within a protected trust account. Some people have been talking about gold standard trusts, and TW have covered a campaign around right to a refund. There are some travel businesses that are setting up CAA approved trusts now as we speak, where no cash at all exits the trust before the holiday is complete. That gives absolute refund simplicity and immediacy. This would be the premium consumer protection model you could have via trust. However, that does require any funds for airlines, cruise, etc., to be funded entirely by the tour organiser. So you would have to have very deep pockets to organise a gold standard trust. So what are we seeing with regards to transition? This is our last slide and the one we're going to conclude on. It frankly isn't easy to transition from a historic no trust position to a future trust position. The simple reason is it will take a lump of cash to go into a trust account in order to fund it for historic bookings and then for future bookings. So you'd have to ensure that you had sufficient funding or were able to raise sufficient funding to ensure this transition. You would need to enhance cash availability and liquidity in order to be able to transition to a trust. That may be where some travel businesses, the smaller ones with bounce back loans, the medium sized with C-bills arrangements, may decide to raise money in order to transition to a trust account. It may require some form of new cash raise. That's a whistle-stop review of trusts from me. I think I might have taken a few minutes longer than Lee wanted me to, but there we go.
Okay, so thank you, Chris, for that whistle-stop tour through to the ins and outs of trust accounts. I'd now like to introduce our two other speakers for a bit of a Q&A afterwards. So we've got first up Daniel Landen, who's the MD of Protected Trust Services. Welcome, Daniel. And we've got Sudheer Sharma, who is from PT Trustees and has been working in trusts since 2001, in travel since 2001. So he's got a lot of experience in this area. First, let's introduce you, Daniel. Just explain to us what Trust Services does and a bit about your background.
Okay, so I came from the tour operator background, looked for a product like PTS sort of 10 years ago, couldn't find it and thought it'd be a good idea to build it. It's taken 10 years and most of my lifetime, which is not great for my family, but there you go. We specialise in running trust accounts in the travel industry. We run them in multi-currencies. We do a daily reconciliation on all funds held in trust. We operate merchant services through multiple merchant acquirers, payment gateways, and also licensing with the CAA. And we provide the ATOL returns quarterly, suppliers, communication with customers, etc. So it's a bit of a plug and play platform that does everything a travel company would need.
Okay. Lovely. And Sudheer, like I said, you've been doing trusts in travel since 2001. I know you've got an accounting background before that, but probably it was TTA, the Travel Trust Association, where you first started in travel. So explain a bit about that background and what you're doing now with PT.
That's right. Actually, not unlike that, exactly like Daniel. In fact, I was working with tour operators before I got involved in the trustee space, and pretty much created the rules around that time. This was before the CA stepped in with their own trustees. And we built systems, we built procedures, how to manage the movement of funds. And after I moved from the TTA, I set up PT Trustees, where we onboarded a number of the accredited bodies, and progressed to other tour operators and travel agents. And our job is to help our clients manage their trust accounts. That's all we do. We don't offer them any other services. Everything we do is purely trustee related and trustee linked. We maintain very close links with our clients. And you could say we've all grown up and developed as both our clients and us. And now I'm noticing that the acquirers are talking to us as well. And COVID has created interesting opportunities, and a lot of the knowledge we've acquired has come in very handy in helping our clients.
Okay. Let's go back to Daniel quickly, and just a quick thought on what the impact of COVID, as Sudheer has just indicated. Right from the very beginning, you know, it's raised questions about how the industry operates its finances, protects cash, etc. And trust has been talked about as being the answer to that from the very beginning of this crisis. Are you seeing that coming through in inquiries and interest from your perspective, companies now actually moving to this, and what's driving that?
Yeah, we're seeing a large increase in inquiries and people looking to talk to us about moving to a trust account model. And this is there's a few reasons behind it. It's merchant acquirers who are looking to actually move risk off of their books and cancel merchant services to travel companies, and those companies are looking for another merchant acquirer. And trust seems to be the only option available to them at the moment. We're also seeing companies that hold licensing and have to meet paid up share capital, and are saying actually with COVID-19 it's going to hit their balance sheet so badly they do need to look at another option. So yeah, it's been a multitude of reasons. Yeah, trust is definitely a long-term prospect for a lot of them about securing their own positions. Yeah.
Is this, Sudheer, is this because, you know, you've got the consumer and the refunds issue has been huge, and you've got the consumer now, I guess they've been educated into the idea that their money isn't necessarily safe when they spend it with a travel company. So is the pressure coming from customers as well, or is it more fundamental than that? We've got business owners really thinking this is the way forward.
I think it's more fundamental than that. I mean, the consumers obviously now want to know how their money is going to be protected, and if anything goes wrong, how quickly can they get their money back? And it's much more fundamental in that, because the companies themselves are beginning to look at what's happened. I always give that analogy: the tide has run out and the rocks have all been exposed. and everybody can see where all the problems are now. Consumers can see the problems, the travel businesses can see the problems, the regulators can see the problems in a much more clearly defined manner. And very interestingly, the acquirers have suddenly woken up to what their exposure really is. And it's the confluence of all these things that now is going to dictate that some solution is put in place that tries to address these issues. It's probably the worst time to be doing it from a cash flow point of view. This is something that should have been addressed a long time ago. How to protect these monies, and it will be interesting how this challenge is now addressed. I'm quite confident it will be addressed. It's just a question of how and over what period of time.
Yeah, I mean, Chris, you went through a few of the challenges that companies might face and why they may not want to go down this route. But you almost get the feeling from what you said was that they may not have a choice. I mean, if they want to be in business from now on, if they want to have merchant acquiring services, they want to de-risk other people in the ecosystem. What else can they do? Otherwise, they simply won't be in business. I mean, it's got to that stage, has it? Do you think that trusts are probably the only way forward?
For some, it has, and I think trusts are going to become more prevalent. PTRs permit you to consumer protect in three ways: a bondman-approved organisation, financial failure insurance, or a trust. If you can't get the bonding insurance, you can't get the financial failure insurance, you can't get a merchant acquiring facility, which you need in order to run your business, then obviously that cuts down your alternatives, and then trusts becomes perhaps the only port of call for some businesses. The transition isn't easy, and I don't think that as a professional advisor to the industry, I could say trust is the only solution. I fully understand Daniel and Sudheer's centred view on trusts. I've always thought trusts are an effective method of consumer protection, but I think COVID-19 has really focused their effectiveness. As I said in my presentation, it's those that have run trusts that have been able to deal more easily with the whole refund process.
Yeah. Daniel, just talk to us about the challenges around trusts and travel in particular. It's obviously hugely seasonal. Cash flow is key. We've learned this over the last few months. Keeping your cash in the business is absolutely vital. And so trusts can have an impact on cash flow. So just talk us through how the industry, if it was to move mass towards a trust situation, how it would cope with that seasonality of cash flow in businesses.
I think a better way to, a better question, or sorry, Lee, might be the problem with having consumer funds in a business, especially in travel, where you're holding on to them for such a long period of time, is it's very easy to fall into the trap of running a business through cash flow, not profit. And a trust account does make you focus on profit. And if your overheads in a year are £100,000, but your profit is £90,000, then you're always going to focus on cash flow as being the primary focus on keeping the business afloat. What you should be doing, or what would be better for most businesses, is to say, if our overheads are £100,000, we need to make £110,000 in the month to be in the year to be profitable. And I think a trust fund does do that. So I think rather than looking at cash flow as a trend within the flows of cash flow within consumer traveling and consumers paying travel businesses, it should be on what's the overheads against profitability of the business. And I think a trust does that, and it's a really good leveler that enables businesses and business owners to help them actually make profit and understand profit rather than cash flow. And I think that's one of the historic issues that we've had as an industry.
Yeah,
it's about cash flow, and it shouldn't. It should be about profit, and profit's the sanity in the room.
Yeah, I mean, so Sudheer, that requires a really change. Yeah, it's a fundamental change in how the industry works. I mean, the big boys work on cash flow. I mean, I think Chris has mentioned that trusts won't work for some airlines and people with lots of capital investment, and they operate their businesses on cash flow, and that I don't think that's going to change really, because they probably can't do anything different from this. So I guess there's a feeling maybe in the industry that there's a competitive disadvantage against other companies that will operate through cash flow, as Daniel was saying. Is that a fear that is justified, or should people get over that fear and think, no, we should do as Daniel said and run our companies based on our profit and what money we make?
See, firstly, I think what has happened in the last 3 months is going to involve a monumental change, and there's no getting away from that. And secondly, what Daniel has said is absolutely the point. In operating a trust model, a business is required to introduce a level of discipline that may not necessarily exist when you're managing cash flow with a different imperative. And having said that, the travel sector is the most advanced sector in the UK in terms of protecting consumer funds. I'm not aware of any other sector that goes to this level to even think about it. Now we're having a conversation about it.
Yeah.
But it's also probably the most emotive one as well. I must have my holiday. And if I can't have my holiday, can I have my money back? So it's incredibly emotive. I mean, if you don't get your fridge, I don't think the newspapers are going to publish an article about you didn't get your fridge and you paid your money over. So from that point of view, I think something will have to happen. The level of discipline and the way it's applied has to be managed sensitively. It's not a question of saying to companies, oh, you must do this and you must do that. Everybody's got to come along in a willing manner so that they implement policies. That's something very interesting, that company directors and shareholders themselves are examining the risks that now come out of this. And they're a much more willing party to implement trusts or some form of protection that looks like trusts than they ever were. Nobody wants to offend their clients. They want repeat business. They want to be able to go to their clients and say, look, your money is protected. It's a question of how we do it from here. Obviously, I would promote trusts. I'm an accountant. Controlling money, managing things properly comes to me as a natural thing. I can't see any other form of protection that quite has this level of discipline attached to it.
Yeah, I mean, not all trusts are the same, Sudheer. You know, there's a lot of various different types of trusts. They operate differently behind the scenes, but ultimately, for the consumer, they just want to know their money's safe, don't they? No matter, I don't care how you do it, just make sure the money's safe, and that's the ultimate aim here. Is there a danger we're swapping one complex situation where no one's really clear where the money is for another one if there's lots of different types of trusts? So I think, does there need to be a sort of regulatory means here of saying you must do it in a certain way, or would that be bad for the industry because you want flexibility in how you operate?
I'm not entirely clear how it's going to work with the regulators, because the regulators the regulators here, the Civil Aviation Authority, and they created an entailed trust structure. I've grown up with it, and the CA have actually done a really good job. If you look at the trust deed that they produced, it's a really decent document. It incorporates all of the elements of how a trust should be run. And to be honest with you, I found that a great document to work with other trusts that are not regulated. For me, the question is, how creative is the regulator going to be? One of the conflicts that we are knocking up against right now is acquirers are saying, can we please have our monies protected? And if it's an entailed trust, the CA is saying, no, you can't have anything sitting in front of our trust. I actually think something can sit in front of the CA trust and not in any way reduce the CA's or the air travel trustees' protection. Yeah. So that will require imaginative thinking. You mentioned, Chris talks about non-flight packages. They are actually more restrictive, because what they say is the money must remain in the trust account until the consumer has enjoyed their holiday. Whereas the CA ones are more creative in terms of allowing flight monies to leave before travel, so long as it's protected. I'm not sure that any way can be found around the non-flight packages one. I think the money has to remain in trust, not least because it's going to suppliers who are not in the UK. They're suppliers abroad. And we have no control over the quality of the suppliers abroad. So it will. I think what would really help is if everybody could get together, people who manage trusts, regulators. I know APTA are against trusts, but I think APTA need to really get away from their resistance to trust. And I'm really sure, confident that a good solution could come. This is a very creative industry.
Yeah. So yeah, we might see some innovation, I guess, Daniel. I mean, as Chris mentioned, trusts wouldn't work for companies that sell through third parties, for instance. But maybe we can come up with something creative and come up with some new ideas.
I think
we want to protect money.
I slightly disagree with Chris on that. I think they can.
Okay.
Look, we reconcile 250 travel companies every day accounts. We do that by 9:30 in the morning. We check every single payment out of trust. Every payment out of trust, which is being paid prior to consumers travelling, is that day insured. We make sure we deal with refunds on credit cards, so our members can't do refund fraud. I think there's multiple of things you can do by adopting technology and adopting them. The days that we live in. I think we've got to be really careful with trust accounts that we don't start looking in the past and start saying, well, that's the way trust accounts have always been run. I think the trustee that the CA put together
Daniel, I think we've got some problems with your sound there, so I'll just stop you. Just to bring Chris back in about what Daniel was saying about being creative around how trusts work. Your point about third party, people work through third parties, was about the time it takes for payments to come through. There are tech companies out there with payment solutions which are about instant payment and instant reconciliation. So that you could find a solution because the way people pay each other changes. Therefore, you would solve that.
Yes, I don't disagree with the point that Dan said. The mindset of the travel industry, then be saying to travel agents, you have to pass this money across to us absolutely immediately by means of this pay solution. And the fact is, you have historical legacy where travel agents have lived off pipeline monies, and it goes back to the point Dan quite rightly made about cash flow as opposed to working capital and profitability. That would require a complete reset of the industry, and that's going to be difficult. That won't happen overnight. If you were designing this with a blank sheet of paper today, you would have a business that would need to have sufficient working capital in order not to use these funds until the PTRs say that you can use them. And if you're selling through agents, there would have to be an expectation of a payment solution whereby they would run their businesses solely off the commission they earn. So if you're starting with a blank sheet of paper without the historicity and without the mindset of established businesses, it could relatively easily be made to work. It would certainly, for operators, take out the whole of the pipeline money risk. And we saw this with the outrageous situation in Thomas Cook Retail, where their retail managers were encouraging people to pay up to a year in advance in full to get a 5% reduction on a rebate of their commission, so that money could be used to capitalise Thomas Cook as a business. And a lot of tour operators lost a lot of money when it failed. That would take that exposure out of the whole scenario, but equally it would deprive travel agents. Normal travel agents would perhaps have a 2, 3, 4 week churn on the money, as opposed to what Thomas Cook management were doing. But nevertheless, that is what most businesses have operated the travel agency model on. So blank sheet of paper moving forward, easy to see how it could be put together. Getting away from the historical mindset and the way the travel industry has been run is going to be difficult.
Yeah.
I think, very quickly on that, I think it's going to be driven by the merchant acquirers in the insurance market. If they no longer want to underwrite the travel industry, you're naturally pushing people gradually towards the separation of client funds from working capital. And I think that's happening now. It's happening pre-COVID-19, and it's going to continue to happen. So I think I don't think it'll happen overnight. I think Chris is right, but I think you can see the movement. It's definitely, the trend is starting to appear.
It's certainly the case. The travel industry ties itself in knots, trying to protect this money as it goes through the system. Everyone's looking to mitigate their risk, so there's all that need for bonding. If you protect the money at source, you take a lot of that pain away, I guess, and a lot of the need for regulation goes away as well. I mean, maybe you won't ever need the kind of strict regulations that we see at the moment. Do you Sudheer, see the potential for some sort of mandatory, you have to have a trust going forward? I'm sure there will be a review of what happened during COVID, and particularly with the refunds issue, and you'll see other consumer groups pushing for a review of how travel works. And as you say, ironically, probably travel does more than any other sector to protect, and yet still it fell down when the consumer needed it most. So do you think we'll see some sort of mandatory regulation coming in where it will be possible to operate without some sort of trust arrangement, or certainly a 100% guarantee of customer money?
So I think I see this in a couple of ways. One is, to go on from Chris's point, if the insurers, whether it's financial failure or whether it's bond insurance providers, are pulling out of the market, and Chris has a lot more knowledge than I have of this, so I will go exactly what Chris says. If they're pulling out of the market, then what option is there going to be when you've got the September at-all renewals?
Yeah.
You need to go and get a license. The insurance is not available. You have no option but to get a trust account, because those are the only two recognized models of protection today. Interesting enough, if I was a business that was going for a license in September, I'd be thinking very hard right now, what have I got, what channels have I got open to me? What do I need to do to prepare myself for my license to be renewed? So I think that is one situation. I don't think there is that. I think that will be brought much closer to home. Secondly, in terms of the regulator doing things, I think the regulator's got a bigger problem. For me, the regulator needs to look at the airlines. You've got many a tour operator who says to you, I would like to refund my clients, but I can't get the airline to respond to me. I mean, the airlines, it's not that the airlines don't want to respond, but they're swamped. I've been in on a call with one of the major low-cost airline team who are responsible for refunds. And they said, we've just been swamped.
Yeah.
We've been absolutely swamped. So I think it's a far bigger problem. So what is the regulator going to do? Are they going to look at the, if we talk about at-all holders, and say, how do we tackle them, or what do we want them to do going forward? Or is the regulator going to say, look at it, which I think the regulator should approach it in this way? We have a far bigger problem. What are we going to do with the airlines?
Yeah.
Do the airlines need to put in some sort of a protection in place? I don't know. Maybe the airlines need to put 20% or 30% of their revenues into a protected environment, and it stays there until some proper solution is adopted. I just don't know. I can speculate with you all day today, but I don't know which way this is now going to go.
Yeah, it's in the second half of this. We'll be talking to On the Beach, who obviously have a trust account, but even with their situation, they had to pay their airlines up front, as Chris pointed out in his piece, so therefore they have to insure against that. So they've been able to refund partly their clients. They can't refund the airline piece because the airlines have been putting money back down the system. And actually, I saw a Morgan Stanley assessment of TUI before it came out with their latest results. And there's a very quick line, not a very big line, but a line in there saying, looking to the future, saying maybe they will be made to put money into an escrow type account in the future because of this issue. So yeah, people are thinking this way. Daniel, do you think there's a prospect of what Sudheer just said, that the big boys, the airlines, the big tour operators will also be made to sort of move in this direction in some way?
I think, to be blunt, I think the airlines got such a big lobbying power. I can't see it happening.
No. And that's even given all the publicity about refunds.
I think their lobbying power is too powerful. I think the reality is you're going to, like we talk about regulation in the travel industry, and we we regulate because we fundamentally have industries full of decent people that want to protect the funds and want people to have nice times on holiday. The issue is the airlines don't, they they've got no wish to protect consumers as far as separating funds until people have the product. I mean, you don't walk into Marks and Spencer's 6 months before you buy a jumper, give them the money, wait 6 months for the jumper to appear. You get the product when you leave.
Yeah.
And then the airlines get the product, and they use those funds as working capital for 6 months beforehand. And if someone else doesn't pay for another ticket, then you're left with the scenario you've got today. And it's not that I think the airlines are swamped, but they're swamped because they're not refunding people. And if they refunded people, that the volume of calls they get would go down.
Yeah.
They're just not doing it.
It's self-evident that the enforcement of Regulation 261, which sits firmly with the CAA, has just not happened. Through an inability, probably, through, as Daniel said, 38 MPs immediately signed up on behalf of the airlines when it started out. Airlines are seen by the government fundamentally to be more intrinsically important to tour operators are, for obvious reasons. And so there is a disconnect. If it works in the way it was supposed to work, airlines refunding within 7 days, tour operators refunding within 14 days, you would have seen a steady flow. But looking at it globally, I don't think trusts have got the hearing at the EU level and at the PTR level that they should have done previously. They've always been there. It's kind of been a side issue. And it goes back to the point that I've always made about how the package travel regulations in the EU package travel directive was driven. It was driven entirely from the UK by ABTA and the CAA. And, it was driven both by them, and ABTA certainly had their say and continue to have their say. They've never supported the trust model. In fact, if you wanted to move your non-flight packages away from whatever protection you've got, financial failure insurance or bonding, with ABTA, and said, well, actually, I'm going to go along to Dan or Sudheer and just set up a trust for this, ABTA would immediately say, well, you have to terminate your membership. Now, I think that's ridiculous. I've spoken to ABTA about trusts on the back of COVID-19. They're absolutely not going to change their rules, which I think is short-sighted. Although they did admit that they feel there is going to be a greater consultation review about rebalancing ATOL, rebalancing the whole thing again, that's going to be coming somewhere down the line. And there's little doubt that what we've seen around the refund piece has to be taken into account. It cannot be ignored. It's a simple fact, because we've had a cataclysmic event that has, as Sudheer said, shown the rocks, shown the bottom of the ocean, and it's not quite as flat as we perhaps thought it was going to be.
Daniel, do you think ABTA might move on that? I mean, if the weight of opinion in the industry is as we've been discussing, they've got really no choice, because their members will be wanting to do this. It's coming from the numbers.
Do you answer this politically or not? I think if they don't, they're going to lose members from it, and to their detriment. I mean, how do you say this? If the board consistently are maybe protecting their own interests rather than the interest of the travel industry, you're probably not going to see it move.
Yeah.
I mean, ABTA are really good. I mean, I think to have a central lobbying point and a central voice for the travel industry is fantastic, and I'm a bit of a fan of ABTA with that. But I think what would be really good is if they actually had a voice of the entire travel industry.
Yeah.
And I think that would be good for the industry, consumers.
I guess really, but also really, if airlines aren't going to change their ways, if the big tour operators can't change their ways, it's those agents who move in this direction that have a USP, because they can go out, as Trailfinders have done during this crisis, and say, we operate in this manner, you're fully protected, and we do this for you, and this is why you come to us, rather than maybe buying direct. I mean, consumers may forget that lesson, but it is a point you can promote.
Yeah, but I think the world's moving forward. The days of having to have ABTA there as a single voice and lobbying and going out and contracting large tour operators because there are only a handful of them has gone. And now set up a travel business it's not that difficult if we're really honest about it. You can do it at quite a low cost. And you can go and contract your suppliers directly now. And with the internet, you can go and search a riad in Marrakesh pretty easily if that's what you want to do. You don't have to go through the big tour operators. I think naturally you're going to see things fragment more whilst there isn't that single voice. And I think to have a single voice in the travel industry would benefit all of us.
Yeah. One of the arguments that Abd has always mentioned about trust is the aspect of potential fraud. I think Chris had it in his piece. I mean, is that an old-fashioned view? Things have moved on since then. Sudheer? Sorry, Daniel first.
I'm going to touch on that really quickly. I mean, we check every bank detail, sort code and account number, we check prior to releasing funds from trust. We check every invoice prior to releasing funds from trust. Mm-hmm. We've been doing this a long time now, and touch wood, we've been, the procedures we grow over time, and as we learn more and they become more robust, it's what we do. So yeah. I think actually, and also what we do have as well, we've got, PTS are the trust providers, but our trustees are independent of PTS, who act on behalf of the agent, or the tour operator. So I think you need to have that separation between a central party who does the administration, then you've got the trustee, and then you've got the travel company. I think that provides a lot of protection for everyone.
Sudheer, you were shaking your head as well when you heard the word fraud.
I think Dan has really expressed it very eloquently. I mean, the world has moved on. Please look at what's going on now. If you're APTA, don't look at what you used to say, because the story from APTA hasn't, to the best of my knowledge, changed. This fraud bit keeps coming up. Surely, managing fraud in a situation where you are examining transactions at a granular level, you've got a third party looking at transactions on a granular level, and that's what Dan means by reconciliation, has to have a much higher value than someone who goes and gets the bond, and then nobody ever looks at their system, nobody ever investigates them, nobody sees anything. I'm not talking about spying on your clients. We genuinely feel that with the clients that we've worked with, we make a positive contribution back to our clients, to their people, by engaging with them. When we examine transactions, we find things, we feed back. Mm-hmm. How do you feed back? If you feed back to your client and say, oh, I want to blame you for what you've done, well, you're not going to get a very positive response from the client. But if you turn around to your client and say, look, I picked this up, I think you might want to re-examine how you are operating here or there, it has to have a much higher value. It goes way beyond fraud. We are managing one absolutely major operator. They're not an atoll operator. When it came to doing refunds, their systems were deficient. They've turned around to us and said to us, can we please work off your reports? So now we're sending them reports in terms of what they, which bookings they may have refunded, because we don't know which ones have been refunded. They're then using our information to manage it within their system to calculate what it is they've done. There's really a great benefit to have somebody sitting outside looking at your records in a holistic manner. I say again, not to try and pick holes or go down the gotcha route. So what APTA is saying, I mean, I don't know.
Sorry to interrupt you. In fairness to APTA, I think pre-July 2018, there may have been a point, because under the 1992 package travel regulations, the independence point wasn't part of the law. If you had a company, and the CEO was still there, and so this doesn't necessarily relate to flight packages, but if you had a company and decided to use the trust model, the directors could be the trustees of the trust. Now that's clearly open to fraud because there isn't this independence aspect. But as Dan and Sudheer have explained, they put in place the independence to ensure that payments cannot leave without them first being reviewed and checked. Mm-hmm. Frankly, any situation is open to fraud. APTA and the CA could not say that they haven't had failed operators outside the trust arena where fraud hasn't been committed. There's been massive frauds committed where APTA have had to use their backup fund to pay, or the CA have had to use the air travel trust. Fraud is unfortunately a fact of modern life. But as the guys have said, the whole independence aspect is a protection. But fair dues to APTA, prior to the new PTRs, they got a point.
Right, well, we have to wrap things up, I'm afraid, because time is short and we've got a second panel to speak to. Just a really quick final question for all three of you, very quickly, just looking forward. Given what's happened, given all the discussion about this, how optimistic are you? Start with Sudheer. How optimistic are you that what we've experienced with COVID is potentially a watershed moment, and that when we won't in the future come back to a situation when, God forbid, travel stops again and the money stops and it's the consumers left sort of carrying the can? You think this is it? You think this is the time when things will really change?
Yeah, I'm actually quite optimistic, and obviously, I would say, wouldn't I, if I'm being approached by people who want to set up trust accounts. But I'm also optimistic because the stakeholders, all the stakeholders, are now on the same page. I think there's a growing realization something has to happen, and it's, as I said before, it's now going to be a question of how intelligently and sensibly it's managed from here, without trying to cause issues amongst the various stakeholders.
Yeah. Daniel, do you share that sort of optimism? We're in a bad situation in the industry, but
I do think you've got to look at it a little bit deeper than that. It's not just COVID-19, it's Thomas Cook, it's ash clouds, it's 9/11, 2008 financial crisis, it's Monarch, it's short breaks. I mean, it's going to be something next year or the year after that's going to hit us. And I think the companies now, especially the owners and shareholders, are looking at it going, how exposed are we? Not just the consumer protection side of it, how exposed are we? And actually, by using consumer funds as working capital, is that good for the business? And how can it help the business? And I think that a trust does a lot of that. And to be really blunt, the costing saving on licensing and merchant services and accounting done correctly, it's more profitable as well. So why not look at it, protect yourself, save money, and start concentrating on profitability within the business? So I think that's going to grow.
Yeah, and just final word, just to wrap us up, Chris. Do you have that confidence you'll be busy man in the next few months sorting out people's trust?
Well, I think trusts are going to become more prevalent. They have become more prevalent. I still think the other options should be open to the travel industry, perhaps under a rebalancing, a relook at certain areas. But I just leave you with one comment that perhaps reflects what's happened. My firm had 3 ASO applications progressing around the start of the year. COVID-19's kind of pushed them back. 1 or 2 of them pretty large applications, actually. And all 3 of those entities, of their own volition, without any pushing from the CAA, came back and said, Chris, we think we need to restructure our application. We're going to rephase our modelling. We are going to look at operating a CA-approved trust account. Could you go back and revise the applications accordingly? All 3 unilaterally did it. And that's out of a comprehension of the COVID-19 impact. That's out of the comprehension of what merchant acquirers were likely to do. So unilaterally, people are making these decisions. As I said, with a blank sheet of paper, going forward, it's a viable option. It isn't necessarily a viable option for people that have a historic model and a historic working capital profile. Yeah. So more prevalence, but I don't think it will become the only means of protection going forward.
Okay, look, great. Thanks very much for your time today, guys. Really appreciate that. And good luck with everything in the future. So thank you very much. Cheers.
Thank you.
Bye. Good luck.